Welcome back to Tax UK, the practical tax channel with myself, Adam Hill, where today I'm going to be demonstrating how to report rental income on a self-assessment tax return. So if you have a rental property, maybe you have a holiday let or even generating income by renting rooms in your own home, then this video will be very useful for you. As always, the aim of the channel is to provide people with content that helps them to manage their own numbers. If you do find this type of content useful, then it is really important that you show support to the channel so that I know the type of content that provides people out there with the most value. Now, you can do this by liking the video, by subscribing to the channel, or by using the donation button below the video, which will help to ensure that we continue to make the content that you guys find most useful. Every like, every subscriber, and every donation is really appreciated. So if you do any of those things, make sure you let me know down in the comments so that I can thank you personally. Now let's move across to my tax return and jump into today's video. Here we are on the Tailor Your Return section, page 1 of 3, and this is where you'll find a question where HMRC are trying to find out if you had any rental income. Rental income falls under UK land or property, so it asks here, did you receive income from UK land or property, including income from foreign property over £1,000? The reason they mention the £1,000 here is because you have a property income allowance of £1,000. So if your total income from UK land and property is below that amount, then technically it's already covered by the allowance. So you wouldn't actually have to tell them about it. And you could say no here. In this example, I have income from UK land and property in excess of £1,000. So I'm going to say yes here and then continue on to fill out the return. Now you can see here, once you get to the fill in your return section, that along with my other income, this return will have now generated a UK property income section that we're going to have to work through here. Before we go ahead and fill out that section of the return, what you'll want to do is prepare some kind of supporting document to show where your figures came from. It doesn't need to be too complicated, but should cover this as a minimum. So the 21-22 rental income section of the return, the period that it's covering, 6th of April to the 5th of April the following year. The different types of property income. So we're reporting income from UK land and property. There are different types of income that fall under this category of the return. The three main types will be investment property income. So if you own a second home, and quite often people will let these out on 6-month tenancy agreements, more of a traditional let, I would say. You could have holiday let income. Slightly different, this one. So you have to make your property available for a certain period of time. You have to rent it to multiple tenants throughout the year. We'll go through the main criteria as we fill out the return. But there's a few benefits to being classed as a UK holiday let. So a lot of people will want to fall under this category. And again, we'll go through that in a minute. And then rent a room income. So if you're renting part of your own home, typically needs to be a room within your own home rather than self-contained accommodation. If you had an annex or a self-contained flat attached to your home, it doesn't normally qualify for rent a room. But if you rent a couple of bedrooms in your house and they share the living area and kitchen area with you, then that will fall under rent a room. And again, there are some pretty generous allowances that fall under the category of renting a room within your home. As a minimum, what you'd want is the total amount of income under each type of property income, and then you're going to want to break down your expenses. Now for property income, you do actually need to break down your expenses, and I would say this here is the minimum: rent and repairs, loan interest, legal and professional, and then other allowable expenses. If you remember my video covering self-employment income, you're given the option to provide a single figure for your expenses. We're not given that luxury under rental income, so you'll need to, unfortunately, provide this breakdown. And there are actually more categories than this, but this would be the bare minimum. And then, of course, that will leave you with a rental profit for the tax year that we're looking at. So we're going to go ahead and complete the return now, or the property income section of the return, by inputting figures from this schedule here. So to enter the UK property income section, it's best to look at any section that is marked as not entered, and then you can click on the hyperlink on the left-hand side, start with the top one, and then work your way through. The first question is, do you want to claim rent-a-room relief? Now, rent-a-room relief covers renting a room in your own home. Again, on the returns, you can always use the drop downs for a bit more information. Rent a room relief currently covers £7,500, so really generous of rental income. So if you rent a room in your own home and your income is below £7,500, then that will be covered by rent a room relief and you wouldn't pay any tax at all on that. And it's split 50-50 if the property is let jointly. So I'm going to say yes to this question because I have rental income relating to a room in my property. If yes, did you receive rents of £7,500 or less? So if you say yes here, which I will, because if you remember, my rental income is £6,500. I do have £50 of expenses, but if they're going to write off the full £6,500 anyway, then I won't be able to claim this £50 of expenses here, which is great for me because you would normally pay tax on the rental profit. But because of that really generous rent-a-room relief, then I won't actually pay any tax on this figure here, which is why renting a room in your own home is so beneficial. And because I've said yes here, I'm telling HMRC that all of my rent-a-room income is covered by the rent-a-room allowance. And actually, I won't have to detail any more information regarding that in this property income section. Now we're being asked, how many properties do you rent out? This is optional. You don't actually have to provide this information if you don't want to. However, in this case, I will. We have 3 properties that we rent out. Remember, I've got 1 investment property, 1 UK holiday let, and 1 room within my own home, which would qualify as a property that I let out. Do you have any income from property let jointly? In this example, I don't. But you can say yes here. Again, a bit more information below. Now, typically, if you own property with a spouse would be the most common example. When you own property with a spouse or civil partner, the ownership will be deemed to be 50-50. So any income that you generate, any expenses that you incur will be split 50-50. You'll take 50%, declare 50% on your return, and you'll take the other 50%, declare 50% on your partner's return. There is an option to follow this hyperlink here, and you can find out a bit of information about declaring beneficial interest in joint property income. The short story is, if you do genuinely own a property with a different interest than 50%, maybe you own 10% and your partner owns 90%, or the other way round, then you can actually go and fill out a form and declare that, so that the income and the expenses would be split in line with the actual property ownership. But you would need to actually demonstrate that that is the truth. But typically, if you don't go ahead and do that, even if you did only own 10% of a property that you bought with your spouse, then the standard option, the sort of go-to, is that you would declare 50% each, unless you've submitted that form. So just bear that in mind. Did all property income cease in the tax year 6th of April 21 to the 5th of April 22? And do you expect to receive such income in the tax year 2022 to 2023? If yes, consider if you'll need to fill out the capital gains summary page. So if your property income did cease, you can let them know here. If this is the only reason why you're completing a tax return, then you can usually put a note in the white space a little bit later on in the return and request that HMRC actually stop sending you tax returns to complete. If you have other reasons, maybe you have high employment income or self-employment income, you would still need to complete a return. And the reason why they ask about completing the capital gains summary is because most of the time, if you've stopped receiving property income from investment properties or from holiday lets, there's a good chance that you've actually sold that property and you might have a capital gain that you need to declare. If you've just paused, maybe you haven't been renting a property over this period, then there wouldn't need to be any consideration of capital gains in that case. Did you receive income from UK furnished holiday let? So in my example, I did. I have a UK furnished holiday let with income here, so I'll need to declare that. There are criteria that you'll need to meet to be considered as a UK furnished holiday let. The reason being, it's more beneficial to be considered a furnished holiday let. Typically, you can claim additional expenses such as mortgage interest or loan interest against the property, whereas you can't with traditional rentals or investment properties. Under UK furnished holiday lets, you're treated more like a trading business than an investor in property. Okay, so very beneficial to fall under this category here. The criteria, you'll find a fact sheet, but there is a small summary here. So you need to make the property available for holiday letting on a commercial basis for 210 days or more during the year. So make it available. And typically, if you've had it advertised on Airbnb or a similar platform for that period of time, then that would cover you there. But it also needs to be actually let commercially as holiday accommodation for 105 days or more during the year. So this is the most important figure, I would say. And just be aware of this word here, commercially. So if maybe you've done 100 days commercially to multiple different tenants throughout the year, and then you decided to rent it for a week to some family members and you gave them a big discount, or maybe you let them stay there for free, that wouldn't count as a commercial week. It needs to be done on sort of an arm's length basis to qualify as a commercial let. So you would have to deduct personal use and any situations where you've really allowed friends and family to use it at a hugely discounted rate that wouldn't be considered commercial. Did you receive income from EEA furnished holiday let? So similar situation in terms of the benefits of being considered a furnished holiday let. However, these are referring to holiday lets that fall in the European Economic Area. So maybe if you have a holiday let in the south of France, you could qualify for this one. Similar setup, however, you have to declare these separately. So if you had one property in the UK and one property in France that both qualified as holiday lets, you need to tick yes to both of these boxes and they need to be accounted for separately. In my situation, I don't have any EEA furnished holiday lets. Mine was purely a UK furnished holiday let. And we'll continue to the next page. On page 2, we need to provide income from our furnished holiday let, our FHL. And in my example, we had £15,000 of income. That will go straight in the top box here. The property income allowance is currently £1,000, and you should be able to get the detail below that. You can claim up to £1,000. However, the property income allowance steps in place of my expenses. So you would only claim the property income allowance if your total expenses were less than £1,000. Okay. Otherwise, I've got to give up my £9,000 of expenses that I've got here just to claim a £1,000 property income allowance. So it's not beneficial. I'd have a much higher tax bill. In this case, we're going to leave that one blank. And the next question, did you use traditional accounting rather than cash basis to calculate your income and expenses? I've done an entire video on the cash basis so you can understand this. Typically, though, the short version is that traditional accounting is more complicated and you need to account for income and expenses when they actually incurred rather than when they were actually paid. Cash basis is more simple. Typically, you'll just include expenses that have cleared the bank during the period that you're looking at, during this period here. So a much simplified method of accounting. Again, go and check that video out. I'll link it in a card now, but that'll give you a good breakdown of what the cash basis actually is and how and when you can use it. But I'm saying no to traditional accounting because I've used the cash basis. Then we've got to provide details of expenses. Now, if you remember on our lead schedule here, I've already broken these down by type. So I need to enter these figures here. We're looking at UK holiday let expenses, but these should correspond pretty well to what HMRC actually ask us for. So repairs, insurance costs and services provided. I had £3,000 that falls into that category. Loan interest, I had £5,000. Remember, with holiday lets, your loan interest is still an allowable expense. So this will get deducted before my tax is actually calculated. Whereas with investment properties, it doesn't work like that anymore, and we'll go through that in a second. Legal and professional fees of £1,000. And then no other allowable property expenses. We didn't have anything in this box here. You can see there are additional categories that expenses may fall into. Again, you'll want to go and have a look at these, but there are lots of additional allowances available for things like electric vehicles. Balancing charges relates to capital allowances, zero emission car allowances. So these are less common for your basic rental return. But if you do want the full detail, use the drop downs just below and you'll be able to see if you'll qualify for any of those reliefs. But as this is a simple example, we're just going to leave those blank and make sure that our profit figure agrees back to our schedule. £6,000 from UK holiday lets agrees to our figure here. I'm just going to circle back quickly because I've skipped past this, but the loss brought forward used against this year's profits. If you do have losses brought forward, maybe in the early years of owning your property, you had some significant expenditure and you weren't able to rent it, you may be carrying a loss forward. So if you have a loss brought forward, you can offset it against the current year profit to reduce your taxable amount. If you have in excess of this year's profit, so maybe if you have £10,000 of losses brought forward, you can actually enter that 6,000 in here, which will bring my profit down to zero. On the next page, you'll then have an opportunity to carry forward the remaining 4,000. And it's important that you do that. If you don't carry it forward, then by the time you get to the next return, HMRC won't be aware or won't be expecting you to offset that loss. So you need to make sure you continually carry this forward on each year's self-assessment tax return until it's been utilized. I'm just going to remove this and I'm going to remove the loss brought forward because I didn't have any of these, and we'll continue with my £6,000 profit. Do you want to make a period of grace election? This is worth looking at if you have qualified as a UK furnished holiday let before, and then maybe in this tax year you haven't quite made the criteria. There is a period of grace election that you can usually qualify for. It's quite flexible actually, most likely because of COVID restrictions stopping people from being able to let their properties. So it's very much worthwhile doing because then you're continually taxed as a UK furnished holiday let. And I think you can carry that on for a number of years before you return to be treating more like a investment property. In this situation, I'm saying no because I already qualify as a UK furnished holiday let. And now we've finished declaring our holiday let income and we'll need to declare our other property income. So our investment property income here under column C would need to be declared on this page. Total rents and other income from property. So we know from my schedule that I have £24,000 from investment properties. 24,000 will go in the top box. Now, it's important to point out here that I had rental income that was covered by renter room relief. And if you remember, I told them that the full amount was covered by renter room, in which case I've already mentioned to you that you don't need to declare that income again on the self-assessment tax return because it's already covered by the allowance. If the full amount wasn't covered by the allowance, so let's say I had £10,000 of renter room income, then you would actually need to include that in this box here. So you'd include the full 10,000 plus your 24,000 in this case. And then later on in the return, you're given a chance to deduct the 7,500 of renter room relief. And I'll show you where that goes in a second. But in this example, because the full amount was covered on that first page, we don't need to declare it again. Now we're offered the property income allowance again, which is £1,000. And in this case, we know that it's not going to be beneficial because I've got far more expenses than £1,000 to claim. But it's worth noting that you only get one property income allowance per person per tax year. So if I had already claimed that £1,000 under a different section, maybe under the holiday let section, then I wouldn't be able to claim it again here. So you have to be selective about where you're including that, if you are including that. But of course, in our example, our expenses far outweigh the income, the property income allowance, so we won't be claiming it. Did you use traditional accounting rather than cash basis? No again. UK tax taken off total rents and other income from property. This only applies to non-UK landlords. Now, this might seem like a strange thing to ask, but if you live outside the UK, but you own property in the UK and you rent it out, then your tenants, the people that live in the property, actually become responsible usually for deducting tax before they pay the rent to you. So if you owe them if they owe you £1,000, they would often deduct £200 from that before they pay it across to you, and then they become responsible to pay that money across to HMRC. So that's why they're asking this question. It's not going to apply to many of you out there, but worthwhile knowing what they're actually referring to here. Premiums for the grant of a lease and reverse premiums. Now, I mentioned that these are the three main types of income that you'll come across. There are additional types of income that you can generate from UK land and property, which typically fall under these two categories. We're not going to go into them today, but you can imagine if you own the freehold on a property and you sell the lease, quite often someone will pay you a premium for that lease. That's where this income comes from. And the reverse of that is true as well. Sometimes when you take on a lease, the freeholder can sometimes incentivize you to take that lease, and they would pay you via here. So you would declare that income in these two boxes, but we're focusing on the three other sources of income for today. And you can see at the bottom, total UK property income is £24,000. Remember, this is only the income at the moment. We haven't actually entered these expenses. And now we're given a chance to declare our expenses. Again, it's simply a case of transferring the figures across. So we got 5,000 to go in the top box. We've got 8,000 of loan interest. Now, what you'll find when we go to enter this is there is no box here for loan interest like there was with the holiday let income. And again, that's because the rules are a bit stricter with investment properties. They don't allow you to deduct loan interest and mortgage interest as an allowable expense now. You do still get a deduction or a reduction in tax. So I'll show you where you enter it. It's important that you still enter it on the tax return, but it doesn't go in this section here. So we'll skip that. I will enter the legal and professional fees of £2,000. And then the remaining boxes can be left blank because those were the only expenses that we had. We then have a great long list of adjustments which typically relate to capital allowances. So we're talking about capital expenditure, maybe if you've had to do major works to a property, things like installing charge points, you get certain allowances for these types of things. We don't have examples of this here. You'll also notice at the top, you have to adjust for private use. So if you were renting a property for 10 months of the year, and then you lived in it for 2 months of the year, then you need to deduct 2 months worth of the expenses by including them in this private use adjustment here. We don't have examples of any of these here, so we're going to save and continue to the next page. And again, if we did have a loss brought forward, we're given the opportunity to utilize that loss against this year's profits. In some rare circumstances, and you can see HMRC actually point this out here, this would be unusual, but on the odd occasion, HMRC may allow you to offset losses that you've made from rental property against other income, so maybe against your employment income. And if you paid tax through your employment income, then you might be able to get some of that tax back, but it's very, very rare. And again, you'd have to go and read the guidance to see if you might qualify for that. And then at the bottom, we have a space for our residential property finance costs. So this is the figure that I couldn't enter before, the loan interest. So for investment properties, you'll want to enter this. It doesn't get calculated in the same way as it does for furnished holiday lets, but you do still get a tax deduction at the basic rate of tax to reduce down your tax bill. So it's worth entering any mortgage interest here. Now, there are some circumstances where you won't be able to claim the full amount of property costs. So, for example, if I have £8,000 of financing cost but I only have £1,000 of profit, or I don't have any profit from my rental business, then most of the time you won't actually be able to claim the full 8,000 there, and you would have to roll part of it forward. So that's why they're asking at the bottom if you have been rolling any forward. In this case, we'll leave the bottom box blank because we don't have anything being brought forward. And then we're given a little bit of white space at the end to provide additional detail that somebody reviewing the return might find useful. Now, if your return is very simple and your matters are very simple, then you usually don't need to put anything in here. Often I see people adding useless information that someone will then have to review at HMRC. You don't really want to do that. The only situations you'll want to put something in here is when it's going to be beneficial to someone reviewing the return. Maybe you already know there are some figures in your return that are going to catch their eye, so you want to try and explain them away here. Also, if you let property jointly with somebody maybe who isn't your spouse and they live somewhere else, and they maintain the financial records, then you may want to provide details of that person here, so that if HMRC wanted to check any details, any receipts, any numbers, then they'd be able to do that with the appropriate person here. Those really would be the only situations where you want to put some detail in that white space. And then we have a summary of our income from land and property. So this is not going to agree back to our schedule exactly. We'll just have a little look at it, but you can see UK furnished holiday lettings here. The income does agree back. So we had £6,000 of rental profit, and that agrees back here. Taxable profit for the year. UK income from property, that's our investment properties. Per HMRC, we have £17,000 here, but per my schedule, we have only 9,000. And the reason for the difference is that loan interest. So I'm also just going to show you where that loan interest comes into play. And you can do this by skipping to the end of the return to view your calculation. You'll want to scroll to the bottom of the page. This does give us a little bit of information about how much tax is due and by when. But at the very bottom, you can see view and print your full calculation, which is what we want to do. You'll see on here our total income and profits from UK self-employment, and then from land and property, which is what we've just entered. And scroll down the page a little bit further, you'll see here a deduction of £1,600, which is basic rate tax, 20%, applied to our £8,000 of financing cost. Okay, so that's where it's being applied. For most people, you're going to get the same tax relief you would have got if that £8,000 was an allowable expense. But if you imagine, if you're a higher rate taxpayer or an additional rate taxpayer, and you normally pay 40 or 45% tax, then usually if that £8,000 is an allowable expense, like it is under furnished holiday lettings, then you would get tax relief at 40 or 45%. But even if you're a higher rate or additional rate taxpayer and this finance cost falls under investment properties and doesn't qualify as a furnished holiday let, you're still only going to get that 20% deduction. So unfortunately, higher rate and additional rate taxpayers are out of pocket with this, and those are the newish changes to tax relief for finance costs on rental properties. That was how to complete the rental income section of the UK self-assessment tax return. Let me know in the comments if you do have any questions or any suggestions for other tax related videos. Thank you all for watching. See you next time.